Press record. All right. Is the stock market all bull? I'm going to start you guys off with a quote by Warren Buffett. Risk comes from not knowing what you're doing. Just keep that in mind as we go along. What exactly is the stock market? The cornerstone of the American economy was created May 17th, 1792. It was established as the New York Stock Exchange. The stock market is made up of individual and institutional investors who come together to buy and sell shares in a public venue. And the difference between an individual investor and an institutional investor tends to be the money that they're spending and the quantity of shares that they're purchasing. And what exactly is a share, you may ask? A share is a percentage of ownership or stake in a company. And the New York Stock Exchange and NASDAQ are the world's biggest exchanges and get the majority of the attention in the United States. All right, the New York Stock Exchange versus the NASDAQ. The New York Stock Exchange is perceived as a more stable and well-established company. Those tend to be your Fords, Macy's, a lot of oil companies, banking, etc. Those are the stocks that aren't going to change very much during the day. NASDAQ is, it's more known for technology and innovation. A lot of these companies are on the cutting edge, and these stocks are, considered growth-oriented and more volatile. And what I mean by volatile is these stocks like Amazon, Apple, and Tesla, they can go up and down hundreds and hundreds of dollars each day, while these Fords, Macy's, and the oil companies may only go up and down 20-something cents as the day goes on. Now, this is important to know before you go into the market. Bull versus bear. All right, and these indexes, I know all of you have your phones now. If you click on the stock app and you go down there and you see the Dow Jones, the S&P 500, that is essentially just a grouping of stocks, and it gives you the average of if they went up that day or if they went down that day. And that's based on analysts who follow the performance of the overall market. Ideally, if you're trying to make a lot of money, you want a bull market because that means there's optimism, prices are going up. In a bear market, there's pessimism, prices tend to go down. All right, and then when the index is on the rise, obviously it means the average value of the stocks in the index is up from the prior day. And then, there we go. Now you may ask yourself, how do you get involved? How do you invest? How can you find more information on trading stocks? Right now, with the technology that we have, it's easy, convenient, free, doesn't cost you anything, and you can trade stocks anywhere. If you download TD Ameritrade, Robinhood, Webull, E-Trade, you can do it from your phone, and you can trade with as little as $1. And I'm going to end it on another quote from Warren Buffett here. Someone's sitting in the shade today because someone planted a tree a long time ago. So why not plant that seed for yourself and start investing? Thank you very much. Stop sharing.
Fantastic. And lastly, we will have Emma.